This is 95.3 Business Now.
Welcome back, everyone. NGX-listed Guarantee Trust Holding Company, or GTCO, on Monday announced plans to raise about 525 billion naira in fresh capital through a public offer, looking to support the minimum capital adequacy of its main subsidiary, Guarantee Trust Bank, also known as GT Bank. The GTCO's public offer announcement comes some 3 months after the central bank governor, Olayemi Cardoso, says that commercial banks may be asked to raise capital in an effort to support the government's $1 trillion economy ambition over the next 8 years. Let's turn to Johnson Chukwu, an investment professional and the CEO of Carry Asset Management, for more insights on this. Great to have you on the show this Wednesday, sir.
Good morning. Thank you for having me.
Yes, sir. Do you see the GTCO's public offer plan as the curtain raiser for similar offerings in the banking sector in the ongoing year?
Yes, I think it possibly could lead to a reaction by other banks who may want to come to the market to raise funds. You know, I've actually spoken extensively on the issue of recapitalization of the bank, and I have said that there are some banks that require additional operating capital beyond their current capital holding, but there are banks that are fully capitalized operationally and regulatory-wise, and that what matters most is having operational capital that is in tandem with the level of risk you are taking and the size of your risk with the size of your balance sheet. So I think we may see a reaction by some banks, but interestingly, they are not the first to come into the market as we speak today. First Bank is preparing to come to the market for a capital raise of about 150 billion. Fidelity Bank is already coming to the market as well for a capital raise of about 132 billion. So GTCO, GT Corporation, is not really the first, but the size of their offer actually trumps that of other operators that have come to the market.
So 150 billion, 132, 500 billion. But the question will then be, is there an appetite out there and right now among local and international investors for public share offerings and for banks in particular?
You know, interestingly, the Nigerian equity market has been on a bull run this year. After the close of trade yesterday, the market has gained yesterday about 38%. And what you always observe is that where the market, secondary market is very vibrant, it creates opportunity for primary market issues, because normally a primary market offer will come at a discount. So investors will think there is a margin of profit if they buy public when those offers are offered at a discount to what the stock is trading on the exchange. So I think the bull run we've seen this year may incentivize investors to take up private public offers. But you also have to contend with the level of liquidity withdrawal by the central bank. That might be a constant, because we've seen in the past few weeks, the central bank has withdrawn more than 8 trillion naira from the economy. And if this trend continues, there's a public offer. There is GTB'S discount that will take place today, Wednesday, the 20th of March, and maybe up to 1 trillion naira would have to be taken out of the system. So if this trend continues, you may find out that there is minimal liquidity available for investors to take up equity offers that come into the market.
So writing on what you just said now, your last point, talk to me about alternative capital raising sources that banks could actually consider and what the outlook is in terms of the expected new shape of Nigeria's banking sector.
Well, I think the bank might consider the foreign nominated fundraising, such as having cross-listing in other bodies outside the country. We've seen a few Nigerian entities like Stepnas being cross-listed. So the Nigerian financial institutions should also consider that. Given also the need for dollar, I think some of them also consider issues Eurobond. Granted that the country risk may have exacerbated and may make those Eurobond offers steep. But if the current trend we're seeing, where inflation rate is declining in the US and other Western countries, and we may see an unwinding of the contractionary monetary policy, a dial back of the contractionary monetary policies by the U.S. Reserve Bank. So we may see in the near future a reduction in global we could be an incentive for Nigerian institutions that want to raise Eurobonds. So we should go beyond the Nigeria's financial system and look at other funding from other sources outside the Nigerian financial system.
All right. Johnson Chukwu, licensed dealer and the CEO of Cowrie Asset Management. We appreciate those perspectives and industry insight. Thank you so much for your time as always.
Thank you for having me.
All right. I am Aramide Falorunsho, and that is your business now for today, Wednesday the 13th. Do have a great day ahead, everyone. It's bye for now.
This is 95.3 Business Now.